Coffee and Real Estate. If you're interested in learning what 2025 is bringing to the real estate market, today that's what we're going to talk about.
Yeah, I know. So 2025 is already kicking off to be a very interesting year for a lot of reasons. So let's just, let's elephant in the room. We have a new president this past week.
Yep.
Right?
He's
And
in.
He's
And
in.
he's officially in now.
He's in. Whatever you voted doesn't matter. We have a new president in there. And now every time there's an election year, there's always activity, and people always before the election, back in October, they're like, I'm not making a move, a financial move, until I know who's president. And it doesn't matter who wins. I just want to put it out there. It doesn't matter who wins.
Yeah.
It didn't matter what party wins. There's always going to be activity after an election. Always going to be an activity.
Yeah.
It just a matter of who wins and what that activity is going to be, right?
Yeah.
And so far right now, we've seen a little bit uptick in the market because somebody won. Doesn't matter who won. Somebody won. Now there's a new president, and people are either optimistic or pessimistic. Doesn't matter. But now they're making moves.
Yep.
Right?
Now they're making moves. Now they see that who won didn't really matter.
Yeah,
it's still
every 4 years.
It is what it is.
Yeah, every 4 years, people realize it didn't really matter. I still have to move, and that's kind of one of the things the way when I talk to clients is that look, it doesn't matter who the president is. If you have to make a move, you're gonna have to make a move regardless of who the president is, right?
Yep.
You know, if you're outgrown your space and you're got 3 kids, 3 or 4 kids, and you only got a 2-bedroom house. You've outgrown your space. You're going to about to buy a house, regardless of what it is. Or if you're downsizing, you got too much space. You're gonna have to move, regardless of who wins the presidency, right?
Yep.
At the end of the day,
you got to move. You got to move.
Oh, relocate to you're commuting 2 hours a day. You're gonna have to move. You got to move.
Yep.
So,
divorce rate's pretty high. You got to. You got to sell. You got to sell. It's happening a lot. So
right, the judge, even if you and the ex-wife are like, hey, no, let's just stick together so that we don't lose a house. The judge is going to decree, hey, you know what? Declare, like, no, you got to sell the house. You got to sell the house. So there's life changes constantly happening, and they have to make a move, regardless of who the president is. So, and we're seeing that in the last month. Now, interestingly enough, as well, we were just talking about it. There's a lot of activity. If you look at the statistics in HAR, we saw quite a few sales happening in December, and we're seeing more and more activity in January.
I think what we're seeing is people are used to the new normal, right? Like it took a while. Right? It took a while to get used to the rates being higher. It took a while to just get used to prices not dropping like crazy because the rates, were higher.
Yeah.
And then I think the last hurdle was, okay, well, the last thing holding me back is I want to see who becomes president.
Yeah.
And now that's over. That's over. Rates are pretty stable where they're at right now, changing little by little, but nothing crazy. And I think people are just finally used to it.
I think we should do a pros and cons of the market, because in everything else, there are some pros and cons, right?
Mm-hmm.
So let's list some of the pros that we see in 2025.
All right, so let's do a pro. You do a pro, and then I'll do a pro, and then
and
then we'll do a con, and we'll do a con.
Okay, pro. You mentioned it. I think we're going to see stability in interest rates for the next year or so. I think the Fed is controlling to pretty much laid out their plan, and we're not going to see dramatic shifts in interest rates in the next 12 to 18 months. I think that's going to bring stability. You mentioned that people are now getting comfortable with the interest rate. It is what it is. I don't think and I think bring people back on market. They've got used to it. They know what they can buy. They've gotten used to, like, okay, this is my budget. This is what I can buy. Rather buy now than that. So that's a pro. Stable interest rates.
Yeah. I'd say another pro, depending who you are, is that we are seeing more inventory coming into the market, right?
Mm-hmm.
So as you see more inventory, where we've been stuck is in this zone of inflation when it comes to houses, because it's been a seller's market over the last few years where it's just driven prices up. But now we're starting to see a lot more inventory come into play. It's starting to get more balanced. It's still slightly a seller's market, but from what we saw recently in the forecasting is by the end of this year, it's going to be a balanced market and probably more in favor of buyers. So a pro would be that if you've been looking to buy and waiting to buy, it's finally going to be to the point where you can actually go in, not have to offer $30,000 above asking price. You're going to be able to go in, maybe even negotiate the price point, and on top of that, ask for sellers concessions to go towards your closing costs,
Yeah.
right? And I think that's what we saw before the COVID run. It was normal
It
to
was
go 5, 10 under ask and ask
for
for
some
another
seller contribution.
3%
Yeah,
in
yeah.
contributions.
And I think
Yeah.
that was what a balanced market is. I think for a couple of years there, sellers might have gotten a little bit. I don't want to use the word spoiled, but perhaps the expectation was
Spoiled.
spoiled. So
They were spoiled, yeah.
in the fact that they didn't have to give out concessions, that they just were going to sell the house at multiple offer situations, stuff like that. So it was only a very short run, but
Yeah.
people get used to that short run no matter what, right? Or it's well, my friend sold it in 2021 and they did above asking, and they stayed in the house for like an extra month, and all these concessions given to the sellers in that point, right? When the reality was that the norm actually was never that, right? But that's a buyer pro, right? However, I know that a seller might say, well, I guess that's a con for me, but I don't know. I want to phrase it this way. I want to frame it this way, and that for you as a seller, you have taken advantage of a inflation. If you bought in 2020, prior to 2020, you have taken advantage of historical uh, appreciation in Houston. And
Mm-hmm.
we're talking Houston.
Yeah.
You've taken advantage of historical appreciation. So if you bought prior to 2020, I can't speak for after post 2021, but if you bought prior to 2020, you have you benefited from historical appreciation in Houston. And so now, if you come to sell, even though as realtors, we don't advise you to sell for the first 5 to 7 years if you want to make any kind of money, right? You're in a position that you can sell within 5 years and still walk away with money. Yes, you're going to have to might concede on the listing price, maybe some concessions on there, perhaps a little bit of both. However, in the end, you still benefited that you're going to walk away with money when traditionally, if you held on for 5 years and you did any of those things, you would break even if we were lucky.
Yeah. And the other pro is one of the main things people were saying is like, why do I want to sell even though I'm going to make all this extra money? I'm going to have to pay it right back out to buy the next place.
Yeah.
And one of the pros is that's not the case anymore.
No.
Now you might give up a little bit on the front end selling, but you're going to be able to make that back without having to overpay when you're buying
Yeah.
now.
So
So
you
it's going to balance out. And if anything, I feel like the appreciation that came over the last few years is more than what you're having to give away to sell. So you're gonna more than be able to compensate for a little drop in what you're giving up to sell by being able to buy in a better
Yeah.
position.
So even then, I'm framing to the sellers. If you bought prior to 2020, you took advantage of historical appreciation, record-breaking appreciation in the city of Houston, and with that, you're able to be in a better position now,
Yeah.
right? You've gained a lot more equity that you can flip that into the next property, like you were saying. So, buyer pro and a seller pro on this one. I know that for right now, sellers are going to like, well, no, I have to give up. No, think about the appreciation. Now, a con being there is that if you did buy a house after 2021
Yeah.
and have to sell, well, the reality is you would have lost money regardless of what the market would have done if you bought in 2021 and sold within the first 5 years. It's just historically, Houston doesn't appreciate enough for you to incur the cost that it costs to selling a house
Yeah.
that fast, right? Again, prior to 2020, our advice was always make sure you hold on to the house at least 5 years to break even, 7 years if you want to make any equity after closing costs, after costs of selling the home. And so we're back to that, right? Again, 2020 sellers, be happy that you were owned a home and got this record appreciation, and we're able to take advantage of that and benefit from that. So buyer pro, buyer con. Let's go some of the cons.
Con. So
So
con is kind of what you were alluding to is the fact that over the last probably 2 years, new builds have been real popular, right?
mhm.
So new builds have been popular. And when you go into new builds, unfortunately, there's not a lot of opportunity to build equity quick,
Mm.
right? The builder is the one who built it. They took all that equity when they sold it to you, and they offered a lot of incentives. one thing that people weren't paying attention to was they were going to these new builds is out of pocket, right? Out of pocket cost was real low on new builds because say it's a $350,000 house, the builders were selling it as a $380,000 house and giving away 30 grand in incentives to help you cover your closing costs, lower buy down your interest rate. So really, you were overpaying, secretly overpaying for these houses so that you would have to have little out of pocket costs, right? Because that's what it took to buy some of these homes. And now a lot of those people are that are needing to sell, there's no equity there.
Mm.
And we're starting to run into a lot of what we call short sale positions, right? Like
Hmm.
people have to sell short in order to even be able to get rid of the house. If not, they have to come to the table with money.
Yeah.
Right. So there's still ways to move forward and sell your home. Unfortunately, if you're in a position where you have to sell it, um, you're gonna have to get an agent that kind of knows how to navigate the short sale process, is willing to reach out to your mortgage company and try to figure that whole thing out in order to be able to sell your home for less than what you owe on it, because some people are upside down on their homes, especially on newer built homes purchased in the last year or two.
Yeah. And I think that let's talk about some of the cons. Is the reasoning behind why they have to sell such turnaround time,
Yeah.
right? The turnaround time is why would they purchase a house in 2022, 2023, and then have to sell? Well, rising costs across the board, inflation, right?
Mm-hmm.
But let's talk about particularly in the housing market. Two things that are really bringing in homeowners right now is that one con is the rising cost of insurance.
That's killing
It's
people.
killing people right now. When
Talking
you
about
purchase a
hundreds of
house,
dollars a
right,
month. Yeah.
hundreds of dollars a month, thousands of
Mm-hmm.
dollars per year,
Yep.
real money that you were using to pay for other things and
Your car
your
payment
car
gone.
payment,
Yeah.
your child's tuition,
Your Whole
uh,
Foods organic level 7 chicken.
yeah,
Like that's not
your
cheap
spa
anymore.
day, right? You
Mm-hmm.
can't go to the spa anymore.
Vacations,
You
eating
can't,
out all the time.
yeah, you
Like
can't get spas and massages as
you got to pick
frequently
up
as
your own groceries now. You can't
yeah.
afford
You
paying someone to pack your groceries for you.
can't do meal
You
prep
know.
anymore. Can't order meal preps anymore, right?
Yeah.
No, so that's real money that is taken away from someone else in there. Not only that, but you also see inflation across the board. If we want to go into that in grocery stores and just cost of living is
Everything. Yeah.
so your one thing that you have to have is you have to insure your house, especially if you have a mortgage, you got to insure that house. So that sometimes takes priority over some of the other items that you have on a monthly basis, right? And so
Yeah.
what do people do? Is like, okay, then they look at their monthly budget. This house, although it was affordable when they bought it, is now becoming unaffordable in the grand scheme of things with all the other expenses combined. Can they still make a monthly payment? I'm sure they can. It's just now they have to make sacrifices and are willing to do that. So now they have to
They have to sell.
they have to sell. So
Yeah.
rising cost of insurance is a con right now, and until that uh, tables off or levels off, we're going to see more people going on market
Just
because of that.
adjusting budgets.
Yeah.
I think one thing I saw was before the pandemic, it was normal to purchase a home, and the cost of that mortgage was about 24% of the average person's income, right? And then leading into over the past few years, as things have kind of gotten a little bit out of hand, people would say it's about 41% of people's income that they're spending on their housing, right? So before, if you were spending 24% of your income and eggs cost double, big deal, like
Yeah.
you could find ways to still
You could absorb that.
afford it. You could absorb it.
But
But if you went into a house in the past 2 years and 41% of your income is now going to your home, and then insurance goes up and eggs go up and tomatoes go up and everything happens, and everything's costing you more. Now you're pushing at over 50%, 60% of your income just gone with just basic necessities, and then people have to reevaluate, like, could I really even afford this?
yeah.
And then have to make that decision of downsizing in the home. Maybe the dream home isn't something I can afford right now. Maybe I need to rent a little bit, live with the in-laws. Something has got to give to be able to make it until we get back to that point
So
of being able to afford it again.
exactly until everything cools off and levels off. What's another con when it comes to housing?
Housing this year, con this year, I would say Man, it's tough because I'm not a con type of person.
Well,
But
I think,
um,
well, uh,
give me one. Give me
I
one.
gotta
I'm
give you
gonna
another one.
come up with one
So
right now.
yeah, so another one is property taxes. Oh,
Yeah.
yeah, property taxes.
Let's each do
So
one more con, and then we'll
well,
we'll call it.
we
We'll
call it a
call
that.
it.
Yeah,
We
we'll
we
because
got
we
to
don't want
keep
to
it
go.
short.
You know what? The outlook is positive so far
Yeah.
in 2025. There is a lot of positives, but we do have to talk about some of the realistic expectations that people should face here
Yeah. Yeah.
in the next year, right? Because insurance are what they are. Your house has to be insured. Well, if you have mortgage, you have to have insurance on there. If you don't have a mortgage, I would advise that is your biggest asset. Do you have to protect that? So
Mm-hmm.
you have to pay for insurance. That is like a outside of life insurance. I think homeowners insurance. If you don't have a mortgage, have that. That's number one. Like I'm always going to be an advocate of home insurance, no matter what. But the other one is, well, we talked a little bit about how inflation or how appreciation. We had record-breaking appreciation for the last 3 years in Houston, right? That we've never seen that. Well, even if you had homestead, we're now seeing that you're being taxed at a higher value every single year, no matter how much we protest it, right?
Mm-hmm.
It's becoming increasingly difficult uh, to reduce your property tax liability now, right? Because home prices have gone skyrocketed, right? So you bought a house at, let's say, $300,000, and it's now worth in the 450. Well, every year your taxes are maxed out at 10% of the previous value because you're a homestead, right? So year two is 330. Year four is 363, right? And then go forth, so forth, right? So within 4 years, you're now paying an extra $100,000 of, not $100,000 in taxes, but of extra value you're being calculated on, right?
Yeah.
So now you have to pay more taxes on there. Again, that cuts into thousands of dollars a year, hundreds of dollars a month.
Yeah.
And so you're getting hit with that as well. So now not only are you paying hundreds of dollars more a month on insurance, but now hundreds of dollars more on property taxes, thousands of dollars per year. So your cost to hold that house is gone higher, right?
Right.
So another con.
Another con. I guess I could turn your con into a little bit of a pro with a tip, and then give you my final thought. Remember
Mm.
Jerry Springer? Jerry Springer's final thought.
Well, hold on before your final thought, because
Oh,
we just
okay.
discovered some news last night regarding homestead
Oh,
exemptions.
yeah, yeah, yeah.
Yeah, and I think it's very important that we
Yeah.
talk about this. So yesterday, Caesar and I stumbled upon an article, and I can't believe that this is not more common knowledge, or they're not really saying it out there. But it used to be that if you filed your homestead exemption, the first year, you were exempt for the duration of ownership of that house, unless you did change your homestead. So you filed it in 1990. You held on to that homestead exemption as long as you lived in that house. You never had to be
Yep.
filed again. You had no more work to do. That protected you because as the property values rise, the state and the local county agents, local tax agencies cannot raise your value more than 10% per year. So you were capped at, right? No matter how much the market value went up, you were capped at 10% increase per year. It turns out now that you have to renew your homestead every 5 years or so. Something that we didn't know as realtors until we found that article last night.
Yeah.
And so now here's our PSA that if you own a home longer than 3 years, go check with the county.
Yeah.
Don't
Check with your
ignore
county. It
don't
depends on the
ignore
county.
any mail coming from the county saying that you have to renew. I know that we used to say as realtors, hey, file it once, then forget about
One
it.
and done. Yeah.
That's changed, and we're here always trying to keep up to date on the latest news when it comes to those things. So we're telling you, go check on it. It's supposed to say 5 years, but you know what? Let's be safe. 3 years,
Yeah.
4 years. If you own a house, especially if you own a house 5 years or longer, check your homestead.
And something we do as agents is when someone purchases a home through us, the next year when we reach out, we're checking their tax
We're
records.
checking, making sure
We're
that
making sure they have the homestead on there.
Yeah.
And now we got to change our plan
So
to then check in
every
5 years
every
down the
4 years
road.
probably.
Yeah, 4 years right before the fifth year, and be like, hey, just a reminder,
You have
renew
to
your
renew your
homestead.
homestead exemption.
So that's something we're gonna do.
Yeah.
And if you don't have an agent, or you have an agent, maybe something you need to kind of spit out to them and say, hey, I kind of need you to start reminding me every 5 years to renew my homestead, because I don't want it
Yeah,
to
without
increase,
homestead exemption protection, without that protection, your home value can skyrocket whatever the county deems possible.
Mm-hmm.
And so you're not protected by that 10%. All right. So keep do that in mind. But final thoughts.
Well, my first one was a pro to what you were saying about taxes going up, right? Kind of what we were talking about. As we do start to see the market in certain neighborhoods take a little bit of a hit, right? Where we don't see values going crazy. Um, Fight your taxes. Fight them now. Now there's probably going to be a few homes that you can show that prove that maybe yours isn't
We-
worth what they say it's worth, and then you can use that as leverage. Whereas before it was hard to find that. Now you're going to start to be able to find some comparables that sold for a price that helps you prove your case that they need to reduce your tax appraisal
Depending on the
amount.
neighborhood, you might
Yeah.
see some corrections.
So look into it.
Yeah.
Fight it if you can. I always say fight it every year.
I say fight it anytime. I know that I was
but
talking about it's becoming increasingly difficult, but yes, some neighborhoods are probably gonna see some corrections, right?
So
Take
fight it.
advantage of
Take
take
advantage.
advantage of that.
Yeah.
You know, take advantage of the corrections.
My last final thought was a con, right? And it's if you're looking to invest in real estate, or maybe you took a weekend course on wholesaling or flipping, something you got to look out for, which we see people running into. I feel like this year a lot of investors, especially new investors, are going to get their ass handed to them. They're going to get their ass handed to them because they're going to be buying these homes above where they should be buying them because they're not taking into consideration the changes that are happening this
The
year,
correction,
right? Like there's a correction coming, and when we say correction, we're not talking a $300,000 home dropping down to
but
150.
no, we're
right?
talking an adjustment. We're talking
Yeah,
when we talk
it's
correction, we're talking longer days on market, right? We're talking
more holding
perhaps more
costs,
holding
like
cost. And so all
Mhm.
those things, for those of you who've never flipped a home, or for those of you who understand it, know that those costs are real costs on a monthly basis that will eat up your profits.
Yep.
Will it make money at the end? Perhaps, right? But that's what he says. Is we're not talking huge price reductions, you know, $300,000 house, it's a fire sale. No, it may mean that they're holding it when they thought it was a 6-month hold. Now they're holding it for 12 months. Well, that's 6 extra months of holding costs.
Yep. Or if you got to give, like we said, there's gonna be concessions happening.
Concessions.
So you got to when you purchase your investment, you got to know I might have to give the buyer $5,000, $10,000 just to be able to sell this thing. So you can't purchase it assuming that you're not going to pay that. You got to buy it at a price point where you're already budgeting in having to give concessions. Um, the one thing that probably has never risen with inflation is agent commissions, right?
Yeah.
And we had the recent thing with NAR where that actually opened the door for agents to be able to be compensated more than they used to, right?
Yeah.
It used to stay, the prices used
You
to be
want my
stable.
buyers.
Now we've seen people have to pay the agent 4 or 5%
There are
just to get the house sold.
There are sellers now that are publicly advertising, saying, "Hey, you know, this is what the selling commission is going to be if you bring in a buyer, right?" I
Yep.
mean, we're going to see that with probably new builds, new construction homes with BTSAs and forms of BTSAs and all this thing. So,
long story short, if you're not taking into consideration
all those extra costs,
a lot of investors are going to be paying $10 to $20 to $30,000 more than they should be for properties, and they're going to feel it on the back end when they
be careful.
they
You know
get
what?
spanked,
And there's,
you know?
what I always say, that there's opportunity in every single market out that way. You just have to know exactly and budget for everything else. So with
Yeah.
that,
And Robert Kiyosaki always says it's all in the buy, right?
it's all in
As
the
long as you buy right, you're always going to make money.
Yeah.
But you got to think about those things as
Absolutely.
well.
All
So,
right.
Coffee and Real Estate, we'll see you next time.
All right, guys.